Welcome! Today we're going to be talking about stamp duty and some great exemptions available as a property trader when you're buying a probate property. Hi, I'm Kimberly Shapcott, qualified chartered accountant, property investor and entrepreneur. This is my channel. Let's sit down and have a chat. So you're buying a property from a deceased estate. What stamp duty are you going to pay? Well, depending on whether you fit the eligibility and the conditions, you may be able to use a little exemption that is available in the stamp duty rules. So today we're going to go into that in a little more detail to hopefully share with you how you may be able to make use of this exemption and relief. Now, the key points of this relief are that you are a property trader and that you are going to be buying from a personal representative for a deceased estate. So if you don't fit those, then sorry, this is not for you. But if you do, then this might be a really interesting relief available for you to remove the stamp duty cost completely. So let's have a look at the conditions, which go a little further than just being a property trader and buying from a personal representative. So in overview, the first condition is that you're a property trader. So you are looking at buying and selling this property. The second condition relates to the person that was living there, the deceased person, that they were actually living there as their main residence within the last 2 years. The third condition is all to do with what you're planning on using the property for and what you're going to be spending on it. So you'll be able to see on screen the information in a second. Now this means that the property trader is not intending to spend more than the permitted amount on the refurbishment of the dwelling, or to grant a lease or license of the dwelling, or to permit any of its directors or employees to occupy the dwelling, and that the area of land acquired doesn't exceed the permitted area. So as you can see, there's a few quite specific details there that we're going to dive into a little more detail to make sure you're confident with how you can use this relief. Condition A is relatively easy to understand because it's basically that you're a property trader. You are a business that is buying and selling properties, and that is really the simplicity of it. So if you're buying it to do a flip strategy, then you are ticking the box and you would be able to make use of this exemption. The second condition, which relates to the deceased person, is whether they have or haven't been dwelling in that property over the last 2 years. And unfortunately, this is really going to be a fact of the matter. They either have or they haven't. So that is just understanding from the seller's point of view that information to see whether you tick the box. And if you do, then we can look at the third condition. Condition C is all to do with the refurbishment you're looking at doing. So you can do the greater of 10,000 or 5% of the purchase price of the property, up to a maximum of 20,000. Now, this is where the difficulty and slight complication comes in, because most people, if you're buying a property, you may be wanting to spend more than that amount of money on the refurbishment, and that might really be because for safety standards, it needs updating. If someone's been living in a property for the last 30, 40, 50 years, then it's likely not going to probably be up to modern electrical standards, and plumbing systems may need updating to what is safe and working order. Now, the permitted development figure is all to do with development, and it's not to do with bringing it up to modern day standards. So to see whether you can actually achieve this, you need to actually have a look at your budget. So if you say, I'm going to be spending 30, 40,000 on this property, what are you spending that 30, 40,000 on? Are you looking at doing an extension, and that's actually going to take you well over the lower of the amounts, the greater of the amounts, the figure that you're allowed to actually spend on the property for development purposes. Now, if you're planning on spending more, then you're just not going to be able to use this relief. However, if of that 30,000 you say, well, actually there's about 20 to 25,000 where we've got to rewire, we've got to make the drive safe because it's a trip hazard, we've got to clear out the garden because there's dangerous trees that are going to fall down, we've got to change the bathroom because it's literally not safe to use. Now, argumentatively, you would be able to argue that these ones are for safety reasons, they're not development purposes. Now, obviously, if you're going to put a kitchen in, but you're going to replace a small kitchen with a massive kitchen, you might say it's not safe to use at the moment, it's bad gas connection, it needs replacing, and that's all to do with safety. But then if you double the size of the kitchen, you potentially might say part of that is for safety reasons, part of that is for development reasons. So it's very subjective, and you really just need to make sure you put on paper how you have fit that criteria to make sure that you are ensuring if they do come and ask questions later, you've got the information to kind of say, no, this was the budget, this was the spend, this is what we actually spent, this is how it fits together. Yes, we have ticked the box, we have complied with condition C. The final condition relates to the permitted area of land. And the permitted area of land is half a hectare or larger if it's reasonable for a property of that size. So if you've got a large property, you might have more land with it, and it would be expected to have that land with it. If you've got a very small property and lots of land, you may have a slight issue here. Now, I would guess for most people and most properties, this is not an issue, and this one is relatively easy to tick off the list to fit the conditions. When you know you've ticked all the conditions and that you are complying with the rules, this then allows you to make that claim. So I suppose the next question is, well, how do you make that claim? This is a relatively easy one on the basis that your solicitor is likely to be doing this on your behalf when you purchase the property. And you just need to let them know that this is the exemption you're going to be claiming so that you don't need to pay any stamp duty. If your solicitor's not sure, then you need to be telling them that they need to be claiming the relief or partial relief on question 9 of the stamp duty land tax return, and the code that they need to be using is 28 other, and then that'll allow them to put that through to make the claim, so you're not going to be paying any stamp duty on the purchase that you are making. The final warning that I would give you is that HMRC do investigate different things at different times. So whatever evidence that you have, make sure you retain it so that you've got it there for future reference if they do come and ask questions. If they do, then they may come and look and see whether you've not fulfilled the requirements, such as you've spent more than the permitted development amount. So with the evidence, hopefully this will be a defence should they come and ask questions. If they do disagree with you, then they may withdraw it and claim that stamp duty back off you. But hopefully if you've done your numbers correctly and you've made sure you've ticked all the boxes, that's not an issue, and you've just got a property with a slightly lower cost for stamp duty. Hopefully today you've discovered how this stamp duty exemption may apply in your property purchases and how to make the most of it to keep your stamp duty costs to a minimum. Please like the video and subscribe to the channel, and do share with anyone you think might find it useful. Let's make tax less taxing.